Good morning, everyone. Brian Hoops here with Midwest Market Solutions. This is Market Insider TV. This is our opening commentary. It's Tuesday morning. It's November the 26th. Thanks for joining us this morning. Hope your day is off to a good start. We hope we can be part of that day today. Hopefully, we can help you out with some ideas here of how the markets are going to trade or how they're going to at least open initially, give you some of the news and background. That's what markets trade off of every day. It's trying to find the news items and how it's going to affect markets and what we can trade given these news. Now, we may have different news items come up during the day, export sale announcements or some other news items that develop as the day progresses, and that can change the course of the trading session. But we want to give you an idea of where markets are headed in the overnight and what the news is that is going to drive them during the day. We are a little bit firmer here in the dollar. We were a little weaker early this morning when I wrote a newsletter, and now we've firmed up since then. Natural gas is virtually unchanged. Crude oil up about 73 points here this morning, almost 1%. Stock market having filled its gap that it left on Sunday night by yesterday's close, now trading higher today. And gold and silver rebounding after sharp losses yesterday. We saw a big drop there, and now we're seeing gold and silver trying to recover just a little bit, although we do remain in technical downtrends. Corn down a penny overnight, beans 1.5 higher, meals down a couple dollars, but look at the bean oil surging higher here, 2.7% gains in the overnight. Oats up decent as well, almost 6 cents gains. And then wheat is 7 to 8 cents better, and this comes on the heels of some crop ratings that were surprisingly large. We'll talk more about that here in a second. So let's get into what we have on tap here this morning. Talking about these markets, we'll not be doing RFD TV today, as we'll be taking a day off from that. And we'll be talking Wednesday and then Friday. And there will be some electronic markets trading on Thursday, on Thanksgiving, and of course Wednesday, Thursday night. You can visit our website, MidwestMarketSolutions.com, sign up for our text service and our YouTube channel. You can subscribe there, follow us on Twitter for latest market information. So let's get into things here. South American weather, talk about that every day, as it remains nearly ideal for corn and soybean seedings and development. We have consistent rain showers in the forecast for the next 10 days. Just couldn't ask for much better growing conditions. And we get into the month of December, that's when a large amount of this crop is in the ground. And we've looked in our newsletters here recently how much planting has been done, and we're in the downhill slide of corn and soybean seedings for Brazil and for Argentina. Of course, we have the second corn crop. They'll be planted a little bit later this year. That's the most important corn crop, but the first crop is virtually done. Same thing in Brazil. We're 2/3 the way there, and now weather becomes very important when you get that crop in the ground, and right now it looks nearly ideal. So first notice day is coming up here this week. Can't emphasize this really enough. Friday is first notice day, the day after Thanksgiving, but all longs are subject to deliveries as of the close of Wednesday night. So we have a big open interest in December corn. We know the funds are long in December corn. That's why we've seen some weakness in here, because they are getting out of those long positions, and they will either now or eventually buy back into March or May contracts. But we noted that we saw weakness overnight in December or March corn, and we continue to see that weakness here, and suspect we'll see some downward pressure until we get past the delivery period. Markets close on Wednesday night. Full trading session on Wednesday, but will not trade Wednesday night or all day Thursday or Thursday evening. Both grain and livestock markets have that cold, hard opening, 8:30 a.m. Central Time on Friday. And then they close early again on Friday, 12:05 Central Time. So very much an abbreviated session on Friday. A lot of the big money traders will just take Friday off, and that'll give us a low volume session because they don't want to be involved on a half a day Friday type trade. So last night, President Trump tweeted his desire to place a 25% tariff on all products that come into the United States, and he's tied this to drugs coming across the border and illegal aliens. He wants to stop the invasion into the country of the U.S. So he believes Mexico and Canada could solve some of these problems with the drugs and illegal aliens coming in, and he is placing a tariff immediately. And this tariff can go away if they would stop the flow, or at least part of the tariffs could go away. But how this affects some of the markets here, China is a very large exporter of cooking oil into the U.S., and that could, if we do have some tariffs, and if those exports are slowed, bean oil could be used as an alternative instead of used cooking oil from China. And we've seen a surge in bean oil overnight. Canada is a huge exporter of oats into the United States. That could mean higher oat prices for consumers here in the U.S. And we saw a little bit strength in the oats overnight. And then finally, Mexico sends a large amount of cattle to the U.S. that are placed into feedlots. As was noted in some of the articles about the feed worm commentary yesterday, could be as much as 150,000 cattle by end of the year not being placed into the United States. And if Mexico has tariffs placed on their cattle that are coming in, would mean less cattle supplies available to be fed here in the United States. So it happens a lot in Texas, southern feedlot regions, where it's have a hard time getting feeder calves out of some areas in the Midwest or the North. It's cheaper to just buy cattle coming out of Mexico, and that's where a lot of the feedlots get their inventories from. Wheat conditions improved 6% to 55 good to excellent. That's the second highest rating in the last 8 years, and it should tell us that rallies should be sold in that wheat contract. So, we get a rally in the new crop July contract. I think there'll be some hedging pressure that'll cap rallies, and I do anticipate that this market will struggle to sustain any gains. In the cattle complex, we saw, gap higher yesterday in the feeder cattle, and then a pretty poor technical close in live and feeders. CattleFax show list is up 2,000 head for a total of 214,000 head. We should see at least steady to higher cash trade. The cutout values improved sharply yesterday, and with Thursday's cattle slaughter being virtually minimal, we'll have a very slow kill week this week. That should help out their boxes and improve their margins, which are negative $34 a head. So we're going to look for additional strength in the cattle complex this week. And grains, I think, could see turnaround Tuesday type trade, but most of that strength is going to come after the delivery period. Have a great day, everyone, and good luck, good trading. We would love to talk with you soon. This has been Brian Hoops. Have a great day, and good luck and good trading.